Okay, good afternoon, everyone. We're going to start right now. How are you? I hope you had a nice week. The last week has been, sure, I mean, we can do whatever you want, guys. I mean, if there is some topic that you would be like me to go through, I mean, we're waiting until the market opens, but the way you want to go through is, and doing your portfolio selection, it is the most important thing that a trader learns how to do or should learn how to do is, or one of the most important things is, in addition to knowing the rules, is what we call the portfolio selection. Knowing what to buy and knowing when to buy. So the most important thing for a trader is to choose what is he going to buy. You cannot be a euro-dollar trader, you cannot be a pound-dollar trader or a cable trader and expect to be making money day in and day out of the market. It doesn't work this way. You need to be able to follow the same set of rules and move from one instrument to the other and choose every day which is going to be the instrument that's going to pay you the most. One of the ways that we do our portfolio selection is by looking at the currency indices. And the currency indices is a basket of currencies. So for example here, that's the British pound, that is the euro dollar, that is the Australian pound, Australian dollar, the Canadian, this is the dollar index, and this is the Japanese yen, the Swiss franc, and the dollar. So the way we do our trade planning, and we do that every single week on Saturday, and I said that several times before, is that the first thing we look at those indices, and we decide, well, for the coming week, which currency we should be looking at buying it, and which currency we should be looking at selling. Because the principle is quite simple, specifically when it comes to foreign exchange. The principle in trading currencies is quite simple if you understand what you're supposed to be doing. When you're doing the Aussie dollar or you're doing the pound dollar, what you're doing is you're buying the first pair and you're selling the second pair, or you're selling the US dollars so that with the revenue you're going to buy the British pound. So you want, whatever you want to be selling must be the weakest, and whatever you're going to buy must be the strongest, because you're going to capture the difference between what you're selling and what you're buying. So we look at the indices, and that is a basket of our indices. And this way we can decide which is the strongest or which it is. So last week, for example, Saturday, we were talking about our first choice was, and these are the stuff that we identified last week, this Saturday, the day before yesterday. So the euro was the weakest currency, and the Swiss was strong. The dollar was also strong. The Aussie was weak. The British pound was kind of mediocre, kind of strong, and the Canadian was kind of weak, and the yen, of course. So if I'm going to be planning our trade, what am I going to be buying and selling this week? So I'm going to be short the euro. That's my number one. I'm going to be short the euro. And I am looking at maybe going short the euro Swiss, going short the euro dollar, maybe going short the euro pound. This was all from Saturday. Maybe the euro yen, but primarily I'm looking at shorting the euro pairs and going long the other one. So all of these. And as you can see, one of the points that we have identified, usually we use a structure point, which is the 142. So right this morning, we are up on our euro pairs quite a good sum of money. I'm going to show you the trades. Now, with that, you take each currency. So, for example, you take the British pound and you analyze the chart. And you can see now that the pound has been in a sideways pattern now, in a congestion, let's say, for several weeks. So this means that it is not strong nor is it weak. It is more in a kind of a neutral. So we're going to give it a slight positive. It's not an absolute sell. Versus the euro, you can see that now it is declining, and it has broken last week to the downside. So this is a very negative currency. So now I'm looking to be a seller for the euro. And you can see now with this decline here that this is much more weaker than if I put the pound. Look at the chart of the pound. And you can gauge that strength or weakness visually by just looking at the chart, and you can see that this thing is holding above the 159.27, above that. So it hasn't sold off. That means it is, if I'm comparing pound to euro, so you can see that the pound here is stronger than the euro. And therefore, today, how do you want to trade? You want to be short the euro and long the pound. Take a look at what happened today. I'm going to get to the criteria, Johnny. Hold on a second. I'm going to explain it to everybody. So if I put the euro pound this morning, and you want to take a look at the chart, look at what happened in the euro pound. Look at what happened in the euro pound. This is the capitulation this morning in the euro pound. And all what we did is that on Saturday, in our online trade planning session, we identified that the euro is much weaker than the pound. The pound is not that big, it's not the strongest currency, but it is okay. And it is much weaker than the euro. So if I'm looking at the euro pound, I'm going to be short the euro and long the pound. And if you would have shorted it from 83.63, that's our selling point. And we plot the numbers in our radar screen. These are our trade plan. You see these numbers, long point, short point. These are our plans. So our plans from yesterday for the euro pound, we are going to short the euro pound from 88.33, or first we're selling it this morning from 88.60. This was the plan from yesterday, from Saturday. And this here is your 88.60. You would have gone short this morning. It is at 88.12. So you're up in this morning about 60 pips on that trade. And the trick was to identify which pair I'm favoring it on the long side and which pair I'm favoring it on the short side. And we go through this process through all the currencies. The same thing with the dollar. If everybody even saying that the dollar is in a bear market, we were getting long the dollar, because technically right above the 75.50 right here, which was on Friday, this is now a breakout to the upside. and we were long. So we want to be long the dollar Swiss, we want to be long the dollar pound, we want to be long the euro dollar. So if you go now following the same process, let me show you the what we had in the our chart. As you see, the dollar was strong, so plus we're going to be a buyer, and we're selling the Aussie and we're selling the CAD. When I put a minus, means we're going to selling it, and the more minuses is, the more weaker it is. So today, if you look at the pound dollar, even with all the stuff that you're hearing on the States, that is the dollar now, our selling point on the dollar. Let me show you, for example, the pound dollar, we are going short below 159.80. The Aussie dollar, we're short from the 107. The euro dollar, we are short from 142.16. These are all our selling points. All these red, whenever it turns red, this means that these are the trades that have been triggered based upon our trade planning session. And if I look at the euro dollar, you would see that there will be a horizontal line at the 142.16. Right there, you see the 142.16. You see this blue line? This we always put the trades on the chart. We're going to go short from the 142.16. Here is the number, so you can see what I'm talking about. This is what coincides with our radar screen, our trade planning session. We're going short at 142.16. This is our selling point this morning, and you would have taken it from 142.16 all the way down to 140. So you're up from yesterday close to 200 pips on the euro dollar. Okay, and the key is portfolio selection, identifying the which of the currencies we're going to be buyers and which we are going to be sellers. Now, where do you find them? Menno, Michael Gallup, give him the address, our web address, or my email address, or info. If you want the link to the currency indices, just send an email, and I would be happy to send you the link where you can get them from free on the internet. So, Michael Gallup, if you please put the email address if somebody wants to get the link for the exchanges. Okay. Now, as far as Johnny's question, what is the criteria to identify strength or weakness? Well, the criteria, there are several criteria, but primarily it is more technical. And the way we trade over here, guys, we have a unique way of trading, and which we call price behavior. And with that, we identify certain price points on the chart we call structure points. There is a lot of webinars that I have done previously on the FX Street. You can see where you can go and visit them and see where how I explain how to identify the structure points and the significant points. There is also some webinars on our website. We work closely with FX Street, so they are pretty much so we have also some other things on our website, but to explain the structure point. Now, once a price breaks through, so everything that you see on the blue colors like this, these are what we call significant points or structural points. And the more it breaks, or wherever the location it is on the chart, is one of the criteria of identifying how how weak is weak and how strong is strong. So in this case, for example, if you look at this chart, you could see that the euro has come below the first blue line, which is the first structural point, and then it has traded below the second structural point, which is the 143.33, and then it sat on it before the close. So this is extremely weak. If I take you to the pound now, because I'm showing you, Johnny, how to do the difference. Every chart that we are trading, we have certain numbers like this. And these numbers we know by heart. These are not fictitious numbers or numbers that we come up with. These are numbers we use. So, for example, if I tell you the number in the British pound is 159.80, the number in the pound is 1.5980. 1.5980. That is the structure point in the British pound. And then underneath the 159.80 is the 1.5706. We know these structural numbers because they are relevant. So now I can see that the euro, the Friday closed above the 142.16. If I put the British pound, you can see it right there. It is still sitting at the 159.80. So just, Johnny, just by understanding this, you could see that the euro has broken through the structured point, while the pound is still above the structured point. So that is one of the criteria that you can use in identifying strength or weakness. So by virtue of what I've explained, you could see that the pound is much stronger, or the euro is much weaker than the British pound, because it broke below the structure point. And as you can see, the numbers are not in my head, like I explained to you, the 159.80 and then the 157.06. So right now it broke about below this. So just by looking at those two, you can see that the euro is weaker than the pound. And if I'm going to take a trade between two weak currencies, I will probably be buying, I'll be shorting the euro because it's the weakest, and I'll be buying the pound, which is, again, and it has nothing to do, I'm just trading those two unique currencies, one against the other. Okay? Now, your other question is, the daily chart of the euro pound is at support. Okay, what does that mean? Johnny, let me give you a piece of advice. The idea, there is nothing, the diagonal support line or buy support or sell resistance, all these are illusions that we create. That diagonal support line, Johnny, you drew. You drew. I'm not trying to critique what you're doing. I'm trying to give you a share. You drew. You're the only one that sees it. You're the only one that recognizes it on your screen. You're the only one. It is as important as you give it importance. But I don't see your diagonal line, so I don't give it the same. I mean, I could be giving it another. So the idea of buying support simply because it is support, or simply because it is coming down to a trend line, or it is coming down to a support line, this is tantamount to trading suicide. Anybody that says to you buy support simply because now it is trading at a support line, that person does not know how to trade. Okay? Now, if you let's not get to, let me finish this point before we discuss the upward trend line. Now, having said that, what you need to identify is when does the rule of buying support comes into play, becomes a correct rule to apply, and when it is a wrong rule to apply. Think of trading, guys, as driving a car. You're driving on a highway, you're doing 65 miles an hour. You have the open highway in front of you, and you're doing 65 miles an hour, and you're driving on that highway with the conditions of driving on a highway. You're keeping your distance from your front of car, and you're continuing in the same direction. You're not switching lanes, you're driving. But once you come into the city, you come close to the city, Johnny, you're coming into London now, into the congestion area. Can you still continue driving at 65 miles an hour? Absolutely not, because you'll end up now having an accident. So even though you can drive, but you have to change your driving style to fit the conditions of the traffic, to fit the conditions of whatever the congestion that you see or whatever. That's why people lose money, because they continue to do the same thing without identifying what is the market condition they're in. So they buy support for support, and they sell resistance for resistance, and they have no idea. All what they know is buy support and sell resistance. But the market condition changes, and the rule changes based on the market condition. Now, so that is the key that you have to understand, is what is the market condition before you decide which rule I am going to apply. That's one. The second thing is, now we're talking about what somebody's asking, Johnny is asking, is this in an uptrend? Well, it's quite simple. I mean, all what you have to do is put the chart on. Yes, absolutely. This is the general view of the euro to the pound. It is still in an uptrend. This here is now a long protracted congested area, and this has been going on in practically in this sideways move now since the middle of 2009. So it's been moving in this range between 81 and 91 within those 10-pip ratio range for the last 2 years. And in this case, if you wanted, if I put the chart like this, Johnny, you don't want to be buying it over here, because this is the bigger picture. This is your congestion right there. So you want to be buying it maybe around the 84, or maybe right here. But this upward trend that you're drawing, I have no idea if that one is going to hold or not. But this here is the bottom of the range, and this here is the top of the range, somewhere between the 91.56 area and the 81.95 area. These are the two ranges. So what we are in if you take the global market, yes, you are in an upward trend, but right here you are in a move. That's a good question. In essence, yes, you can use support and resistance. Again, if you correctly choose, or if you correctly identify the support and resistance points, most probably you will be able to use it as a target. And I don't believe in targets. I don't believe in targets. I don't believe in somebody saying that I'm going to project this to go up to this price point, or this is going to come down to this price point. Because this is something like playing God, if you will. But you can use it as a reference point. So let's say your support line is 87. Let's say, hypothetically speaking, let's do this. Let's say the market, this was Friday, okay? And the 88.33 is our support line, okay? Now, you are short from 89.40. You're short from here. This is where, right there, this is where you put the short, okay? Now, the prices are coming down, and you're looking at the support area of 88.33. This line there. Now, my question to you is, shall you take profits over there? Or should you buy it? What do you want to do here, Diageo? You want to buy it or you want to take profits? If you decide you're going to take profits over here, this is what happened. Let me show you. This is what happened. This is today. If you take profits at 88.33, you're leaving 33 pips on the table. And 33 pips in the euro pound is equivalent to 50 pips on any other pair. Because the euro pound is about 1.6 of any other pair. So you're leaving $500 on the table. You're leaving 500 pounds on the table. If you come in and you stand in front of it here and say, I am going to buy and go long at 88.33 because this is support, and you go in and buy it, this is what happened. You will be losing 500 pounds on your position because you bought support. What you do, Diageo, is you use it as a reference point. You use it to see how the price behaves at this point. So let me show you what I mean. Now, this is the number, the 88.33. You see this here on the daily chart? So we put a line on your screen like this. This is how we trade. We put a line on my screen like this, so I can see it. And you see what happens as soon as the price comes to your support line, because a lot of people, all what they know is buy support and sell resistance, they will jump in and buy, and you can see now this little bounce. This little bounce does not mean that you have to get out of it. If this is a true support and a turning point, you will see this stop and fly up. And you're using this area over here to make a judgment call of what you are going to do with your position. So you're looking at it and you're making a judgment call. You say, oh, at this point, nah, just look at this bounce. This is 88.32, so it went down one tick, and the highest it put was 88.38. So that support, Diageo, it just bounced of that support 6 pips. That bounce was basically nothing, just 6 pips. So what do you think? Is this a strong support or a weak support? if all the buying they could muster was 6 pips, obviously it is too weak, and you should stay. Then you decide, now I'm not going to take any profits, and I'm going to wait and let it go, and that would be the remaining of your trade. So we use the reference point, the structure points, as a point where we are going to look at the charts and we're going to make a decision whether it is support, a strong resistance where we're going to get out, or we are going to take our profits, or we're going to stay with our position much longer. Okay? And we need to make that decision every single time we're looking at the charts. All right, guys? Anybody has any question on this before I go on? Based on what I see over here, there's nothing but air, Johnny. I mean, it should be going to the 87.40. The next level is the 87.40. This is where it's going to come down to, and then I'm going to make another assessment. I mean, going all the way down to 84, I mean, we have to find out, but why not? I mean, there's no reason why it shouldn't. But for the time being, this is the next target. This is where it stopped before. This is where it previously behaved. Or probably, I think the strongest one has always been the 86.61. This has been a very strong reference point. And you can see it here. That's why we encircle them so that we know the ones that are strongest. So the next level is going to be the 83.30. This one is the 87.40 is a very strong one, and then the 86.61. So these are probably going to be the next two directions. And until it gets there to the 87, I will see how it behaves, and I'm going to make up my mind then. But until that point, we are short. These are our positions. And as I said, if you see them red, this is how we trade. This is all, we plan all our trades every week on Saturday, and we populate, we enter them into the radar screen. So we come like this and we say we're going to go short the pound New Zealand. We don't follow it, but I'm just giving you an example. Let's say at 1.400, and once I do that, it will appear that this is where we're going to be short, and once the trade is triggered, it will turn red, or if it's a buy, it will turn into green if it's a buy. Okay? So this is all our positions. Okay? Somebody was asking about the dollar Swiss. Okay, so yeah, he was saying, why is the dollar strong and yet it is still coming down versus the Swiss franc? This is an excellent point, and it's also coming down versus the Japanese yen. Remember, I think it's Strat. The dollar index is a basket of the dollar against the pound, against the euro, against the Aussie, against the CAD, against the Japanese yen, against the Swiss. So the dollar is strong against 4 or 5 currencies, and it's weak against the Swiss and against the Japanese yen. And this stands to reason because the Swiss is the safe haven currency in the world. So everybody's buying the Swiss just to protect themselves. So being a safe haven, everybody is putting his or her money in the Swiss franc because it is the safe haven. And if you look at this, our chart, our long-term positions, this is the Swiss franc. We're long the Swiss franc from the July the 1st, and we bought it at 118, so we're up about 180 pips on that. And if I put the chart for you for the Swiss franc, look at the chart of the dollar, look at the chart of the Swiss franc. There's your Swiss franc. So if you look at this, this thing is strong and going up, but if you look at the British pound, it is coming down. If you look at the Aussie dollar, it is also coming down. If you look at the Canadian, it is also coming down. So in essence, as a group, the dollar is strengthening against 4 or 5 currencies, and it's weakening against only the Swiss franc and slightly the Japanese yen. So the Japanese yen, as you see here on the chart, is going up still, and the Swiss franc is also getting strong. Aside from that, the dollar is strong across the other board. So if you want to play the dollar, to go long the dollar, then you buy the dollar pound, or you short the pound dollar. You buy the euro, you sell the euro dollar or buy the dollar euro. You short the Aussie CAD, the Aussie dollar, and you short the dollar, and you go long the dollar CAD. So if you are favoring a dollar trade, you don't want to go long the dollar Swiss because the Swiss is strong based on what we see. You don't want to buy the dollar yen because the yen is strong. But if you want to play the dollar, then you play the dollar against the currencies that are weak, which is the weakest is the euro, then the pound, then the Aussie, then the CAD. If you're looking at the New Zealand, you're looking at it against the dollar tip-top or against the... Okay, this is the New Zealand dollar. I mean, it's pretty much in a good uptrend. It's still positive. The trend hasn't changed for the dollar New Zealand. So in essence, we should be long the New Zealand dollar. But it is kind of topping because it goes very much in sympathy with the Australian. So with the commodities topping up and the Australian topping up, there might be a little bit of profit taking, if you will, coming into the New Zealand. So I will be still long-term bullish on the New Zealand, but I need to wait before I start buying right here. Okay, guys? So, having said that, what we need to do now is to start, once you identify your portfolio, what are you going to, and you have to do that. You must, I cannot stress strong enough to you the importance of planning your trade, knowing going into the coming week which currencies you are going to have a positive bias towards, you're leaning to buy, and which currencies you are leaning to sell. Once you do that, you can start drawing your diagonal lines, Johnny. You can start looking at support and resistance. You can look at all of that, because if something is strong, then you don't need to be looking at resistance in that currency. If a currency is weak, this means it's going to decline. then you're not looking at an upward trend line. You're not looking at support in this, because this is, you have identified its general weakness. Therefore, it is a selling opportunity. Therefore, you expect it to break support. So you have to have a common sense approach to the market. It's not predictive. You're not supposed to predict the market. You're supposed to anticipate the market. I am not critiquing you, Johnny, my friend. What I'm doing is I'm sharing with you my experiences, and I hope that from these sessions that you all become gainful and profitable and make a ton of money. Anything that I'm saying, I'm sharing with nothing but affection and caring for you. So please do not take it as I'm critiquing anybody. I don't. I want to make sure that I'm passionate because I want you to be successful. Okay? So yes, you have a general point on the trend, Johnny, about the euro pound, but the trend, my friend, is subjective. You have to take the big picture like this. Okay? You cannot take the trend from here to here. You have to take the whole big picture, as many amount of data that you can have there, and then you can decide, yes, so in general terms, I agree with you, it's in an uptrend. But within that uptrend, right now, it is trading in a range from somewhere around this point here to somewhere around this point. This here is a range. That is my range of this sideways pattern. Therefore, if it is coming down like this, Johnny, I'm expecting it to come. I need for it to continue down until it comes and does this. Look what it did here. It comes here and it stops for several days. And then it bounces and then it comes back and stops again for several days. And that's why we call our trading technique price behavior. I am letting the price talk to me. I'm letting the price to tell me this is what I'm going to do. I came down to the 84 and I stopped and I'm bouncing back up again. So I'm going to follow the same process. I am anticipating the market movement. I am not predicting the market movement. Guys, do not predict the market. Do not try to predict the market. If somebody says that my euro is going to come up to 1.321 and it's going to stop, he might be lucky once, but he cannot predict. Nobody can predict the future. Nobody. He might get lucky once, but he cannot do it for a living. And if it's something you know for a fact that you will not succeed at, you know 100% of the time that you cannot succeed in predicting. If that's the case, if I can predict where the euro is going to stop, I think some of you guys, somebody was asking me if it's going to come to the 84 and stop. If that's the case, if I am able to predict that, well, I might as well be able to predict the numbers on a lottery ticket and go and buy myself a lottery ticket. If I'm able to predict something as big as the euro market where it is going to stop, It should be easier for me to predict the lottery ticket. So we don't do that. All right. So how can gold rise even when the dollar is so strong? Well, the gold is rising similar to the Swiss franc because it is playing a role, and the role that it is playing is of a safe haven. Okay. Now, in a safe haven, people really do not care what they do. They are just buying because whether the dollar is going up or they need to be buying. God bless you, Roland. So that's why they're buying the gold. So they buy the gold. They want it. They are not really interested in the correlation between the gold and the dollar. Yes, in many instances, gold and the euro will go. Gold and the dollar will go in the opposite direction. But in some cases, these correlations work most of the time, but they do not work 100% of the time. There are certain situations that these correlations does not work. Okay? So, of course, there is uncertainty with the euro, Harley, and there is a lot of uncertainty going on with the euro, and you need to be careful with that, and so that's why they've probably been buying gold, and it's pushing now up probably towards the all-time high. And similar with silver. You see silver now is beginning to move higher. Okay? So, absolutely, Paul. Absolutely. Guys, there are 5 things that you need in order to succeed in trading. There are 5 things. I don't have a PowerPoint here, but I'll... the first thing, I'm going to put them for you. The first thing that you need is set of rules. That you know why are you going to buy or sell. Yes, I will eventually be buying it, yes. Yes, and gold is still in an uptrend. The second thing you need is, the second most important thing is your portfolio selection. You need to know what are you going to buy, when are you going to buy, okay? And what are you going to sell? That is key. The third thing that you need is, I will call it optimum timing, optimum entry, the best possible entry, because whenever you're going to go short, you need to put your stop. So the optimum entry that you need to get is important because it will make your stop smaller, your risk smaller, and it will allow you to stay much longer into the trade. So you need the best statistical entry, not the best statistical entry. And then you also, the fourth thing that you need is the best statistical exit, so that you can take your profits. You don't want the perfect 100% perfect exit, you want the best statistical exit. Last but not least, you need a tool, a piece of software, a computer program that knows the rules that you are going to follow, and you understand these rules, and will help you in doing your portfolio selection, and will get you into the trade at the best possible time, and will get you out at the best possible time. So you take those four things and you put them in a computer software, and that is what you can, and you make exactly a nice martini. And here is your Martini Genius. Look at this. This is how we trade again. So we have our rules. They are very clear exactly what you're going to be doing. Exactly. We know exactly what we're going to do. We identify our entry points, our exit points. We do a portfolio selection. And then this is our workspace. And the software that we have now, I mean, the radar screen we use to do our portfolio selection. We use that to do our portfolio selection every morning. Where are we going to buy and where are we going to sell? And then we take this to do our, so for example here, the Euro Swiss, remember I told you we're going to short the Euro Swiss, we're going to short the Euro Aussie, we're going to short the Euro Pound. So you come in and you turn the strategy on. You turn it on. And what we're doing is we're going to be selling the Euro. We're going to be looking at taking the shorts. And what we do is just turn the system on. So I'm watching the European session. That's it. I turn it on and I let it go. And whenever the signal pops up, it will come up on the screen. And the same thing with the Euro Swiss. Why? Because you're choosing in the beginning of the session what is the pair. So for example, this is the Euro Pound this morning. This is the trade. We went short at 88.58 and you covered the trade because it closed the session at 88.22. The same thing with the Euro Swiss. So that is the optimum entry. I'm going to explain the optimum exit in a second. And the same thing with the Euro Swiss. Anything with the Euro pairs, just turn it on and turn it off. But the key is you. The key is understanding the rules, and you're identifying to take the trade, and you follow it in the Euro Aussie. You can see all the trade in the Euro Aussie, the same in the Euro Swiss, and the same in the Euro Pound. And now you will have 4 or 5 winning trades, and you're making the most money on those. So having that portfolio selection, look at this. There is your trade. And it looks exactly the same as the one in the Euro Pound. Going short at 118.39 and going out at the trade at 117. You're making 100 pips. Yes, we did. You can automate it to take it automatically or to pop up and give you a signal. Say, please go short now or go long now. So you can automate to have automatic execution or to give you a signal, now it is the time to take the buy or take the sell. Yes, we have automated all the rules of price behavior for the long term and for the short term. All right. So Paul is asking, what does it mean, statistical exit? Not particularly, Paul. If you take a look at this chart, this is the Euro Pound. If I ask you, if I look in hindsight at this here and ask what will be the best possible trade from here to here, everybody would say, I want to go short right there. And I want to close, take profits right there. Right? And this here is going to be what we call the best. Exactly, knowing it at the top and picking it at the bottom. That is the best possible trade. Well, it would be amazing, of course. Yes, Milo, we put everything in, yes. If you have any questions, ask Mike Gallup, and he's going to explain it. He will send you the information. So just send an email. Send an email to Training Traders Info, and they will respond to you. So anyway, when we say we want to take the best possible, that is fine. This is if something looking in hindsight, looking back in history, I can say this is the best. But we cannot make a living on that. We want to take the best statistical. So the best statistical is somewhere in between this here, somewhere around here, and we're going to close somewhere around there, somewhere probably here. And that is going to be the trade that we take. That would be the best statistical. And we're going to go back in doing our homework when we do our research is to identify not the perfect exit, but the best statistical exit, the exit that will give us a continuous positive results and a continuous winning results. That's what it means as statistical exit. Because you cannot have the perfect exit if I give you the perfect result every single time, what that means is I am optimizing my results. I am trying to find what is the possible result, and these results would have been effective up till yesterday, but they will not be effective for tomorrow's trade. They're just this as a historically going back for the last how long data you are testing, that would have been the best possible result. Okay? So you don't want the perfect result, because the perfect result is for yesterday, it's not for today, nor is it for tomorrow. Okay? Does this answer your question? Now, Milo, as far as automating what we have done or the way we trade and the way we program and the way we were able to put it together in a computer's program, is our rules are clear, are specific, and they are well defined. And if I am able to explain a rule to you, then by definition I can explain it to a computer program. And therefore that guy can program. And therefore we have the rules of price behavior has been programmed. Okay? But we're not using a moving average, we're not using a trend line, we're not using that, all that stuff has been proven not to make money anymore, and therefore we are using all the tools that nobody else is using. Now think of this, guys, and I am not giving you a surprise. These are statistics, and it is one of the things that you guys should appreciate, the good work that FX Street is doing by bringing to you a lot of people that have trading experience in the market, that they are coming and to share with you their experience. This is a fantastic forum, and you would appreciate their efforts more if you know that about 80% or 85% of the people that come and try their hand at trading for the first time without any education or knowledge, 80 or 85% of them end up unfortunately losing money. Okay? These are facts. I'm not trying to scare anybody out. On the contrary, you are the smart guys. You're here spending the time trying to learn, so you are already on the right track. But the fact remains that the fact remains that the majority of people lose money. Now, what is a sure way? What is a guaranteed way for us to make money? If I have a situation that 85% of the people that come into the market trying to trade, and we want to trade, lose money. Exactly. We need to do the opposite of this. We need to find not just the opposite of what they do, Genius. We need, exactly. We need to find out what these guys are doing and do not do. Because if I keep on doing the same thing that they are using and I expect a different result, that is called insanity. You cannot keep on doing the same thing over and over and over again and expect a different result. We need to stop what we do. So what do? They go for moving averages, they go for trend lines, they go for Bollinger Bands, they go, whatever they go for, this, I am going Fibonacci, I'm going to do this, I'm going to do that, and they, God bless them, they might be right, but the statistics doesn't lie. 85% of them lose their shirts. So in order for us to succeed, we need to do something different, and we need to do something that they cannot hurt us. They cannot beat us. We need to play a game that we only, and the tool now that's giving us this advantage is something like price behavior. Okay, and price behavior, we are not using moving averages, we're using the tenets of technical analysis, and of course we're using money management, Johnny. You have to use money management whether you're using price behavior or you're using anything. Anything in life, you need to manage your funds in. Okay? Absolutely. You need to manage your risk. Trading is risk. You're buying risk and you're selling risk all day long. And that is a crucial part of being a trader. No, technically you cannot. Technically you cannot. This is an interesting point, Johnny. This is an interesting point. And no, hold on. No, I understand. No, it doesn't. Let me explain that. This is one of the essence of trading. So he's saying that somebody with good money management can make money flipping a coin. Yes, but it depends upon the amount of bet that you flip. Flipping a coin, like Johnny was saying, is 50-50. You can win money, win one time and win another time. So if you and I are playing this game, Johnny, every time I flip a coin, I make $1. Every time you flip a coin, you win, I lose $1. So the win-loss ratio is 50-50, but the money management aspect of it is both of us winning and losing the same amount of money. One of us, the one with the biggest bankroll, the one with the biggest amount of cash, will end up winning, because a time will come when he will have a consecutive run of winning 10 or 15 at a time. But if you use high probability trades, even though you have a system that works 50-50 of the currencies, and you're making 3 times what you lose, that is a good trade, because on the 5 times you're going to win, you're going to be making 3 times as much as you lose. So at the end of the day, you're winning all the time. And that is what trading is all about. Absolutely. You have to wait for the setup. You have to wait for the high probability trades so that you do not end up flipping a coin. And that's what trading is all about. You have to follow the rules. And what does follow the rules mean, Harley? Follow the rules means you will identify high probability trades. Portfolio selection also gives you higher probability trades. Optimum entry gives you higher probability trades. All of those gives you the high probability. Okay? So Paul is asking a question. For instance, today the market has been aggressively short across most pairs. At some point, it will stop and turn. Is there a way to anticipate when that happens? Let me ask you a question. This is a very good point. If the market has been aggressively short, yes, it will get to a point where some people are going to be taking profits. These are the ones with the short viewpoint, or the day traders or whatever, but the general psychology for the market is still to the downside. So, and we use the same reference points like what you see here. So my reference point is the 88.33. That, as long as it stays below this point, right here, this is where going to be your profit taking point. And for example, like today, where we're trading the, this is the euro pound. Right here, this is where we're going to cover our short. Right there, this is where we're covering our short. And you take your profits and you get out of the trade on a short-term basis. And if I put that for you, I will show you. Now I'm going to turn the session into, rather than so for example here, I'm not going to go long. All what I'm going to be doing is, anyway, let me turn it up for you, so that I'm going to close now the London session, and now I'm turning the US session, and you would see now where we get out, and right there where I put the mouse right there, you'll see that this is where it is going to get me out. At this, exactly this point, this is where it is, as soon as it's just calculating the data, right there, this is going to be my exit point. This is where it is going to take me out, right at this point. In the data now, the market is kind of slow, so it's a little bit slow on calculating the data, but that's about it. Okay? All right, guys. What else? We have another 10 minutes to go, so anybody has any other question? In essence, please do. MetaTrader versus Facebook. In foreign exchange, it all depends on your broker. We use TradeStation and we use multi-charts. We are more now, in favor of multi-charts than in TradeStation, not for nothing. Multi-charts allows us to give our clients the choice of having their own broker. With TradeStation, you can only trade with TradeStation as your broker. So you're limited with your choice of brokers. With multi-charts, you can use TradeStation as a broker, you can use interactive brokers, you can use PFG, you can use anything that you like. MetaTrader is a good platform, but we are unable to put yes, you can use our software with interactive brokers, and you can execute automatically with them. You don't have to use TradeStation. We are moving now to multi-charts. It's the same data, and you can execute with anybody, and GFT, yes, absolutely, with anybody. I can show you the list of, if you send me an email, I can send you a list of all the brokers that we deal with. So send an email to info@trainingtraders, and I will send you a list of all the brokers that multi-charts work with, and you can, if they fits with you, then fine, you can take it. We are not brokers, guys, so we really don't care which broker that you go with. That's why we're using multi-charts now, so you don't have to get stuck with one broker. You can go with anybody that you like. Again, as I said, I really don't care, Genius, who your broker is. I don't take commissions from whoever you trade with. That's not what we do. So I am on your side. Okay, I want you to be successful. So what I have done, or what we have done here in Trading Traders, is found a platform that allows you to hook it up to any trader. So you can hook it up to interactive brokers. You have a problem with interactive brokers, you have another broker, just turn it off and turn it on. It's the same thing. It's just as if putting gas from any station. If you need an ECN or whatever, I cannot comment on anybody. I'm not familiar with any broker that is criminal. I'm sure if there is somebody, then that I don't know any of such things. But if you trade very short term and you're comfortable with where you are, then all the power to you. I mean, there's nothing. NinjaTrader is good. We haven't established a relationship with them as of yet, but eventually we will. But right now we're just taking one step at a time. So right now we set it up with multi-charts, and multi-charts have about 15 different brokers. Discovery, FXEM, interactive brokers, PFG, there's a ton of them that you can use, and that's what else for you. And yes, NinjaTrader and multi-charts, they both have the same. They have the same thing as the DOM. This is the depth of the market. So this is so you can see the market depth like this, and exactly you can buy here, sell here. But guys, This is the topic for the next lecture. We're now running out of time, but this market depth of the market, and people telling you that you can read the level 2 NASDAQ, and this is the direct access and all that kind of stuff. This, guys, and the market depth, these are all tools made for what? These are all tools made for deception. This is what we used to do. They are tools made for deception. Let me ask you a question. Absolutely. Absolutely. Let me ask you a question, Mr. FX Pro. You want to buy $10 million of USD Swiss. You yourself personally. Will you come here and put that I am willing to buy $10 million? Yes, they use it, but they use it like I'm explaining to you, Mike. Yes, of course, they can put buying 500,000, buying 500, buying 100. They will put many. How many? But if somebody comes here and says, I am buying 10 million, what he's doing is he's giving you the impression that he's right there and he's now support. And when it comes right down there, he can lift or he can pull back his bid in a second. And suddenly the floor is taken right off your feet and it's gone. And you have no support. You're falling right down into the abyss. It's true. What do you mean? That's what it is. Listen, guys. If you are a car dealer, and you come into my shop, I come into your shop and I want to buy from you, I ask you, how many cars do you have in your inventory if you tell me I have 1,000 cars of this model, I will think that you're not able to sell and I'm going to walk away. But if you come in to buy the car and you say, oh, this is the last one I have, these are the only two, this one is paid for and this is the last one, and they're going like hotcakes. Dealers, what they do, they are trying to play the market. They can show you an offer, they can lift the bid, they can do this, but they are not obligated to actually buy at the price they put. So if you're using market depth, use it with then how to beat the market. This is how to beat the market, is to use the tools this is how we devise how to beat the market, is by looking at tools that doesn't allow us to follow. This is it. Look at this here. See those two lines? I want you to count how many times it breaks below this line you make money. We devise our own rules that we don't need. Look at this. You got 3 trades and 3 of them are winners. We just identify high probability trades. And let me give you another thing, FX Pro. If I am today UBS and I'm buying $10 million, you think tomorrow I still want to buy the same 10 million again? Does this mean that every day at 10 o'clock in the morning I'm buying 10 million euros? Today I might be buying it for a client. Tomorrow I might be selling it for a different client. So any tool that you have there that is so publicly publicized, okay, make sure that you understand that there is a reason. Why would somebody who is a sane, prudent businessman advertise his intent? Would you personally do it? Would you go to the world and say, I want to buy 10 million? If you would not do it yourself, why do you expect a successful, brilliant trader like the banks to do? And that's why I'm telling you guys, people will sell to you how to learn, how to read this, and this is the hammer, and this is the hook, and this is whatever it is, and whatever. Fine, brilliant. But what's going to be in effect today is not going to be there tomorrow. Exactly. What you need to do is to use something that gives you the advantage. And all that stuff, guys, the ECN and all that stuff, this is all part of the standard things that you need to go away from. Okay? We have a couple of more minutes, 4 minutes. So somebody was asking me about the turtles. Well, guys, I'm very proud and honored to say that we have now the turtles sitting. They are being trained now. We're training them on the same rules that we've been discussing with you. They're beginning to practice because some of them are novices and some of them have some training experience. And we hope that they start beginning to trade within 10 days from now. So we're looking probably that they will start physically trading probably by the first week of August. But I am very excited with their progress so far. And by the way, they are using now, when they're doing their market research and their portfolio selection, they are using FX Street calendars. So every morning, all my turtles come into the platform, and we look at the economic calendar of FX Street, and we see the economic news that's going up, and we start to decide which way we'll be doing our portfolio selection. That's what we do every single day. So with that, guys, hopefully one day, Milo. So with that, guys, I thank you very much, and I bid you farewell. I hope, yeah, it is a pain, yeah. It's a joy. It's a joy. Thank you, Maud. Thank you all. Have a great weekend.